Good evening and welcome to tonight's live webinar where we look at the ASX investment opportunities in review for the 18th of May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals offers a broking account based around our model portfolios, which consist of the ASX top 20, 50 and 100. We also cover the US S&P 100. We have model portfolios based around our ASX and US high conviction, which picks up the ideas expressed on the blog. We also have a new ETF iShares Global model portfolio, and within the broking account we can run an independent portfolio where we work in partnership with you to execute the ideas that we jointly agree on, and utilizing derivatives we can do covered calls to enhance an individual stock's cash flow, or we can also run put option strategies all within the one broking account. So if you'd like to know more about the Investor Signals broking account service, please contact me on 1300 614 002. Visit our website to access the free trial to the technology that I'm displaying tonight, and if you'd like to know more about the broking account, click on the online broking link. The technology that I'm presenting tonight is the Investor Signals member area. You can get access to it for $1,320 for the year, and again just contact 1300 614 002. This is a table of the average S&P 500 earnings, and I'll just review this. We've covered it in past weeks, but in simple terms, in 2019, average earnings for the S&P 500 were running at $162 of earnings per share. The relevance of this is the question becomes in 2021. Can the market get back to delivering $162 of earnings? We tracked sideways in 2018 and 2019, so we'd gone almost 2 years there with earnings being relatively flat. And what do 2020 earnings look like? And that's really something that's a bit of an unknown quantity given the number of companies that have withdrawn their earnings guidance for the June quarter. We'll see the June quarter earnings posted in the first week or two in July. I suspect that the numbers are going to be quite a shock for the market, but the focus of the market is what does the recovery look like in the second half of this year. But even in the environment where we get a moderate recovery, we're likely to see these 2020 earnings down substantially, and it may be that the average comes in far lower than this, which kind of puts the S&P back in a range that logic would suggest that it should be more around this 2500 level than 3000 level, and likewise with the Nasdaq. So up on screen there's a graph of the Nasdaq. So we're still of the view that we're getting into an area where some profit taking in this rebound is likely to occur. So as I move through tonight's charts, we'll have a look at where the opportunities in the market exist. And before we do that, so this is the chart of the Nasdaq. So on Friday night we saw the Nasdaq close up on the session high, so it looks like we may go up and retest this resistance again. The price gap in the Nasdaq's back up to sort of 9,500 points, so there is a chance that we could sort of push that full 4 or 5% higher than where we are at the moment. So I've widened sort of that resistance gap there, and we'll just continue to revisit that. By the same token, if we see this roll over and a close below this average, it may be the start of sort of that profit taking and the correction in the market. Tonight we'll start by going into the ASX 100, so we'll have a look at the ASX Top 100 watch list, organise it in percentage gains at the top. We get the buy signals in order here, so as we go through these graphs, they're all stocks that are under algorithm buy conditions, and as we move through the list, we'll get to a point where they switch from buy conditions into sell conditions. So I'll comment on the ones that I've flagged on the blog. Newcrest is one of the stocks that we've been repeatedly focusing on the blog from much lower levels back down here at around $22. Again here on this pullback that was following the company raising a little over $1 billion, shoring up their balance sheet. Since then you've seen gold rally from just under $1,700 an ounce up to $1,770, and so from a trader's standpoint, you could form a view that there's no harm in starting to lock in profit on some of these gold trades at the moment. The longer term fundamentals for gold still remain supportive for higher gold prices, but given that Newcrest has rallied from $20 to $32 just in the last 6 weeks or so, a fair bit of that optimism is now starting to be priced in. So there's a number of ways you can approach it, either just simply taking profit, allowing the price to run a little bit more and see if it tracks back below the moving average, or until such time as it makes sort of a lower low and a lower high, in which case it'll switch to an algorithm sell signal. You could stick with the trade. So just depending on your time frame there and your approach to the market. But Newcrest has been, along with North Star has been one of our favoured sort of sector allocations. Santos and Origin were our exposures to the energy space, albeit Origin switched to sell conditions, so we've favoured Santos. You can see there that I've shuffled the support line up to 450. There's still risks that the broader market starts to focus on sort of that economic deterioration in the impact on company earnings. But for the moment, energy prices are moving higher. The momentum favours the upside, so you can continue to sit on the long side of these trades, and just have a look at that higher low there in Santos at around 450 there as a stop loss there. Fortescue, so the iron ore trades, our preference has been Rio over Fortescue. But Fortescue had a great day today. Iron ore was pushed from sort of finding support in the low 80s to now rallying back up to around $93 following the supply issues coming from South America. Iron ore is likely to continue to remain buoyant given sort of that backdrop, and that means that we may see Rio sort of push up to this $95 level here before I think maybe it starts to run into some resistance. So we'll see. Still on the long side of Rio. I've shuffled the stop there up to around $80, simply saying, look, as long as the stock stays above this average, stays above the support line, give it an opportunity to move up towards higher levels from where it is at the moment. Oil Search preference, Santos over Oil Search at the moment. Ansell, extraordinary run here from $20 up to $34. The fundamentals there starting to get a bit expensive, but so it's not a stock that it's in the model portfolio, but from a trading standpoint, it's not a stock we've been active in. BHP, we've been holding this and promoting this on the blog as an opportunity in the market. Stocks above that moving average there, support there at around $28. Iron ore moving higher, oil prices recovering. If you thought about the context that maybe Rio could trade $95 in over the next day or two if the US market remains buoyant and iron ore holds up where it is, that'd coincide with maybe BHP getting up to that $35 level there before running into resistance as well. Beach not doing there at the moment. Northern Star, so we like this within the gold space, but again, I think as a trader you could start thinking about taking profit in these gold stocks and just waiting for a pullback before adding to them. Car sales, so we've liked this out of all the technology plays. We've spoken about realestate.com, Seek, car sales and Zero. I highlighted that Zero switched to sell conditions, but car sales seem to be maintaining the best listing data out of as well, certainly out of Seek and realestate.com. But at around $15, you're starting to get up to a level where I think short term it starts to run into some resistance. But if you're chasing momentum in the market, certainly staying long car sales unless it came back down below that average. You can see there that the real pivot point for the breakout in the rally was back at 12.44, but at around $15 with arguably some impact to earnings yet to be known by the market. You would think around $15 is near full value. REA, so we continue to like these technology basket names. We're always of the view that they're going to be sort of stronger recovery opportunities within the top 50 or top 100. In the case of REA, they're at around $89 as support, but again, getting back to a level where maybe just below $100 it runs into resistance. Atlas not doing there at the moment. Challenger not doing there. Ramsay Healthcare, this starts to look a bit expensive to me, just on a 12-month outlook. The earnings are going to be flat this year. It's trading on less than a 2.5% dividend yield. The balance for the market's going to be optimism around the economy opening back up again versus valuations in the market. And at some point, um, you know, we're likely to start to see resistance come into play simply because the earnings growth is just not there. But it'll be an interesting sort of tug of war between the positive emotions from or the optimism from the global economy reopening versus valuations and where forward earnings start to sit. Oz Minerals, so we like this name. So this is a resource name we favour. Obviously, it's a copper producer. I've spoken in detail about them expanding mining production. Support there at around $8.50. So Oz Minerals, BHP, Rio are our preferred, and then obviously we've had the gold plays, but starting to think that maybe gold just finds short-term resistance where it is at the moment. Star Entertainment still struggle sort of to get an indication as to when sort of that VIP market can return, given that it's very much dependent on inbound international tourism. But Star Entertainment's an interesting opportunity with the property development side of it, both on the Gold Coast and in Brisbane. They do have new competition coming into the market with Crown setting up in Sydney. You can see there the higher low formation stop loss at 250. As long as it sits above that, you could trade the momentum to the upside there at the moment. Not there in Afterpay. We spoke about Tencent taking an equity stake, which sort of supports Afterpay, and that might be something that we look at on the next algorithm buy signal. Amcor, we like this name. The longer term fundamentals are attractive. However, from a valuation standpoint, we came into this COVID period with Amcor only growing earnings sort of somewhere between that 1 to 3% range. They had some cost synergy benefits that were still coming through from the Bemis acquisition. It's hard to see them emerging from 2020 with better earnings than what they came into it at. So at around this sort of 14 to maybe $15, I'd start to think that it runs into resistance. I would certainly be a buyer of Amcor on any sell-offs. I'll keep you updated on the blog when we see a pullback there in Amcor and we're adding to that position. Seek, again, preference car sales out of this technology basket, but they're all trading in a similar technical pattern. Just be a bit cautious, watch for a reversal back below that moving average, and maybe we're getting into levels where they start to run into a little bit of resistance. Not doing their Mervac at the moment. Orica, I'd flag that a pullback there to around that 1550 was support, so the stock's rallied from 1550 back up to 1650. It's above the average at the moment. They had no trouble getting their capital, their placement away, Orica, which was, I think, sort of a support for the longer term fundamentals for the business. CSL, so we see support here at just around this 300 level. But maybe think about selling covered calls to enhance the income there with CSL. Not doing it there with ALS. Coca-Cola, reasonable value proposition down here, but selling covered calls and driving the extra income out of it. We've spoken in detail about how Coca-Cola America saw roughly a 25% fall off in demand. We probably see similar numbers playing out for Coca-Cola Amatil, but you would think you start to see a gradual recovery in volumes into the second half of this year, which should mean that we're fairly close to support levels there in Coca-Cola. Computershare, comfortable with this. Their earnings are relatively defensive, albeit part of their earnings picture is earning income on money on deposit. US interest rates have gone backwards. but owning Computershare at or near this sort of $11 level and selling covered calls is something that we're comfortable with. ASX, we're starting to see indication of market volume starting to fall back a little, which will have an impact on ASX. But on the flip side, as you've seen interest rates go lower, the market's searching for, or investors are searching for areas of relatively safe yield. The conclusion that I draw here on ASX is that it's pretty close to resistance, so owning it and selling covered calls, or just simply accepting that it's moving sideways and collecting the 2.5% dividend yield on it. There are longer term prospects there for ASX to maybe be part of a takeover bid again, as we continue to see exchanges globally consolidate. Qantas not there at present. ResMed supported around $25, so pretty comfortable with ResMed in portfolios at the moment. Illumina, just keep an eye on this. I think the shorter term momentum's a bit negative at the moment, but I'll update you on the blog if we start to see that turn positive. Again, preferences clearly Rio and BHP, Oz Minerals. Wesfarmers, I've just shuffled the support up here to around this 36.50 level. Still have some concerns as to what trading data looks like for Wesfarmers in the June quarter, but with a view that there's support there at sort of around that $36 level, you could trade the momentum as long as the stock holds above that. Keltec, so this has been one of the ones that I've spoken about on the blog. So like the fact that from a momentum standpoint, with the people returning back to work, sentiment towards Keltec's improving oil prices, as travel increases, I think that the sentiment towards Keltec's improves. Maybe full price is back up somewhere around $26, $26.50. I think it sort of bumps along sideways as we're starting to see more commentary out of the company with their strategy around spinning off their real estate side of the business and separating it from the retail fuel side. Insurance Australia Group struggle with all the insurance names, but there's a point where maybe this stock starts to get cheap enough where it's worth looking at. The momentum indicator's still heading lower there, but at around this sort of $5.20 it starts to come back onto our watch list, and I'll keep you updated on the blog. Downer EDI, preference is CIMIC over Downer, so we're not doing too much there at the moment in Downer, nor in Sol. Cochlear. So this is a stock that you certainly see mixed earnings targets from, or price targets from analysts, but again we get some comfort from how quickly the company was able to secure the placement of stock at $140 a share, shore up the balance sheet. Demand for their products globally, I think, continues to make the story attractive. It is trading on a high PE ratio, but support there at around this 175, and as long as it stays above that, you could trade the momentum higher. Transurban, despite the positivity around the economy reopening up, I think the suspension or the change to the won't be a full suspension, but the change to the dividend payout this year should cap Transurban, and I think it really trades sideways from where it is at the moment. Woolworths, so we like this at $35. The risk reward looks attractive here, so we're happy to buy Woolworths at these levels. Look for a small move higher and then sell covered call options. So a combination of the dividends with those call options, you're generating about 8 to 10% cash flow. Magellan not doing there at the moment. TPG, I think the telecommunications sector should be fairly defensive as we move through sort of the second half of this year. So both Telstra and TPG, I've put support there for TPG at around 680, and as long as it holds above that, you stay on the long side of the trade. Sonic Healthcare is one that I've been highlighting on the blog at around $28 thereabouts. I think that starts to get near full value into next year. I don't see a reason why Sonic can't trade back up to sort of that $30 to $32 again. by middle of next year. But again, with a little bit of uncertainty around what the impact of earnings look like for 2020, it really should start to run into resistance at around that $28 level. Cleanaway, we like this name, so certainly if we had a few days of selling as a result of that US market turning lower, and you could pick up Cleanaway back down around that $1.70 level, that's where I've got supported around 165. But I think you look back in a year or two, and these are low levels for valuation for Cleanaway as they continue to sort of benefit from um, sort of vertically integrating their business into sort of the recycling and the closed loop economy that the Australian government's trying to create with plastics, aluminium, cardboard, glass, etc. Coles groups I like with Woolworths down here at around $15. This looks attractive, and I think from a risk reward owning it on this sell off, so it's corrected from $18 down to $15. Owning it here, waiting for a small move higher and selling covered calls. Coles trades on a slightly higher dividend than Woolworths. Lendlease, we like the long-term fundamental story here for Lendlease. Again, just hard to get visibility of what 2020 earnings impact really looks like. So it does carry a little more risk, but within that property space, Lendlease is one of the few names that we're continuing to hold. Not doing there in AMP at the moment. The bank's still concerned on with the regional banks, and likewise with the four majors. Maybe Macquarie is a little more interesting. Sydney Airports, don't see it doing too much at the moment. Again, concerns around visibility of earnings. BlueScope there may be supported around $9, but not one of our favoured names. James Hardie, so they've suspended their dividend, James Hardie. And we're likely to see a fairly material impact to 2020 earnings, but the market's got 21-22 earnings picking back up quite quickly. Now that is obviously yet to to be something that can be a certainty. But if you think back to kind of past economic slowdowns, the governments were fairly quick to move to stimulate the housing market, and at the margin, James Hardie and Boral should be well positioned as we come out the other side of this. Whether it takes another 6 months for these names or 3 months for these names to consolidate before that uptrend rally begins, but I'd certainly keep both Boral and James Hardie on your watch lists. Not doing there in Dexus at the moment. JB Hi-Fi, not doing it there. QBE, again, very cautious on the insurance companies. I'd spoken in detail about the issues they face in the US at the moment. The health insurers, I think you just got to avoid those for the moment. CBA. So, from a short-term perspective, I think just if you're sitting on the short side of this stock, this downtrending resistance line might just, this is really for shorter term traders, that you could say, okay, well, stay on the short side of the trade until it breaks back above that. But broadly, the Australian banking sector, I still have concerns that the capital raisings are not sufficient, and we're likely to see them do another round of discounted rights issues, maybe more in that July-August period. But I suspect that there's still further work they have to do to shore up balance sheets and to clean up the liabilities that they're likely to face throughout the course of this year. And that next sort of period may be sort of more that late June, July, that we start to see some of that commentary increase in the market. APA resistance up there, good attractive dividend yield. Came into this, I'll just jump back while I'm talking. So it came into this period with about 6% underlying earnings growth. We'll see another trading update in 6 weeks or 8 weeks time, but at around this sort of 11 to 11.50, I think it tracks sideways but offers a defensive dividend yield. Telstra started to rally there off that $3 level. We had that level flagged that at around that $3 was good buying. Today we saw a bit of selling. It'll be interesting to see whether it comes back down and retests that sort of $2.96 or $3 level. But there seems to be increasing optimism globally around the telecommunications sector and obviously the growth opportunities in 5G. And you've still got Telstra sort of plans sitting there in the background where they, in the next maybe 12 to 18 months, you may see increased commentary around them spinning off their infrastructure division, which will help unlock shareholder value. So be prepared for a retest into this sort of sub $3 level, and you may get an opportunity to increase the exposure at lower levels there. Brambles we like, 5% earnings growth. We'll see a further trading update again in about 6 or 8 weeks time, but I've been of the view that it is expensive, and if anything that 5 to 6% earnings growth is probably going to miss on the downside rather than surprise on the upside. So we really want to try to be a buyer of Brambles on a pullback closer to that $10 level if possible. GPT, not really doing too much here at the moment, but if you're searching for quality exposure to Office Trust, GPT's our preferred name, but around $4 there. We just need to get more clarity on what the earnings impact for 2020 looks like. NAB, I've put here that resistance up here at around $17. From when we started looking at this on the short side, it's moved from $17 down to $15. You're seeing Westpac down at sub $15. CBA is now under $60. It just feels like the momentum there, in a fairly buoyant market, the major banks have struggled, which is probably not a good sign, especially if we see the US equity market roll over a little. AZJ back down at around this sort of $4 to $4.25 is our buy range there. Don't want to pay too much more than that for it. I've spoken in detail about how they're paying out 100% of their earnings in dividends, so we just don't see too much upside surprise room there for AZJ, so you want to buy it on a pullback to make it worthwhile. Macquarie, it's interesting, I suppose, if you think about Goldman Sachs in the US. They're not identical businesses, but you're starting to see a bit of negativity pick up around the outlook for Goldman Sachs in the US. A lot of Macquarie's revenue is funds under management fees, but they have large exposure to infrastructure. We saw negative earnings trends coming into this period, and therefore it's hard to get too optimistic about what Macquarie's earnings look like over the next 6 or 12 months. So it's really a function of if that US market runs into a bit of resistance, maybe we see a retest of Macquarie at this sort of $93 level. So I'll keep you updated on the blog there, but at the moment it seems to me that the better opportunities have been in the gold names and the iron ore play, being Rio and maybe BHP, but there's a limit to how much further that trades higher as well. Evolution, so we've been on the long side of that, taken profit. Now we've moved into stocks on the short side. So the difference here is we're mostly looking at stocks where the momentum's rolled over and is now making lower lows and lower highs, and they're under sell signals. So all the other names, albeit there are a couple there in the banking space that we were not kind of too bullish on, but all these names now as I move through this list are under algorithm sell signals. So Worley's, we got resistance there at around 920, looking for that to move lower. Stockland's cautious there. Vicinity cautious there. Aristocrat, interesting, this has just been removed from the model portfolio, so back up at around that $25 to $27. It's running into resistance. Charter Hall not doing there at present. A2 Milk, so Centre Group, so maybe back up against resistance there at around that 230, 250 level. Zero was removed from the model portfolio there at around $80, sort of $4 thereabouts. So again, our preference is sort of more in that car sales, REA. Crown, still a little bit concerned there around Crown and what 2020 earnings impact looks like, so around $10, thinking that resistance stays in place. Origin, we like the longer term fundamentals for Origin. but the algorithm engine switched to a sell signal here, so our preference is Santos over Origin on a short-term basis. But it may be that we can see Origin push into that sort of 6 to 650 range. But we'll keep an eye on that and update you on the blog. Woodside Petroleum around that $22. So again, our preference is Santos over Woodside. Not doing it there in RWC. Tabcorp, sentiment-wise, as pubs and clubs reopen and life starts to go back to some activity there, Tabcorp should be a beneficiary of sort of the normalised trading conditions or some level of normalised trading conditions. But again, they never came into this with strong earnings growth, so I don't expect too much there on the upside. So we'll continue to sort of watch Tabcorp Cube, not doing there at present. Nine Entertainment resistance at around that 150. South 32, not doing too much there. Suncorp preferences sort of short on the side of CBA and NAB and Goodman Group. So this had been a really strong performer in the model portfolio. It's now back up against resistance at around $15. So we're not doing, that's now removed from the model. Link not doing there at the moment. Spark Infrastructure, Domino's, CIMIC Group. So not very often we focus on buy signals with stocks that are under algorithm sells, but CIMIC's an interesting case where large infrastructure projects in Australia, the company's cleaned up their balance sheet from the mess in the Middle East and focusing on Australia, New Zealand and Asia. So a simplified business, not without its risks, but I've just put a support level in there at around that $21 level, and if it stays above that, you could look to sit on the longer side of that momentum. Aurora again came into this with weak earnings, so Amcor's better position than Aurora, but there is a valuation argument down there, but not doing too. Medibank Private, so this was removed from the model, so resistance at around $2.90. Iluka not doing there at the moment. AGL, so again still under sell conditions, so preference within that space had been Origin, but that's now under sell conditions as well. Altium within the software space, so this had been a good contributor to the performance of the algorithm portfolio, but just flagging it around this $37. The stock's rolled over, made a lower low, and just concerned that's running resistance there at around $37. So we'll look at that again. So you could think about some of these as a short position in the market, or simply just wait for them to switch back to algorithm buy signals and then add them into your portfolio. So Treasury not doing there at the moment. Bank of Queensland under sell conditions. Whitehaven's under sell. Incitec's under sell. You may recall me flagging that Incitec just did a discounted rights issue and raised $600 million to shore up their balance sheet. So that's a great example of, over the second half of this year, if we see this name start to sort of end this downtrend, begin a structural uptrend, we'll see it switch back into algorithm buy signals, and at that point we'll start to focus on it. So some of these companies, and Boral's another good example, it's been in a long-term downtrend for the last few years, but there will be a point where it starts to move higher, creates a higher low, and that's where we'll get the algorithm buy signal. And that's where the technology I find is very handy, just to remind you of the stocks to start having a look at that have switched into those buy conditions after they'd been in a long-term downtrend. But for the moment, so Boral's got resistance here at around $3. The stock's moving lower, and we'll sort of, there may be a shorter term trading opportunity there in Boral, but we'll revisit that on the blog. So ANZ, so we had the sell signal here in ANZ up at around $27. The stock's now down at 15. Even from a shorter term perspective, it's closed on its lows. It's below the average. So we're still hard to get too bullish on these banks at the moment. Unibail not doing there at present. Virgin Money not doing it there. And then back to Newcrest. So to finish tonight, I'll just go into the watch list. I'll do a couple of things. Let's just have a quick look at the model portfolio. So if you come in here, select what model you want to have a look at. Make sure the envelope's green, in which case you'll get emailed when a stock's added or removed from the model portfolio. If you go down and look at the past performance, you can see here that Goodman Group was held in the model for roughly 2 years. It was entered at $10, closed out at 14.36, 48% gain. ANZ was entered at 26, it was closed out, so the main gain there was the dividends, but obviously from a timing standpoint, getting out at $26 was a good level, as was the case with Scentre Group getting out at 4, Woodside Petroleum getting out at 33, Suncorp getting out at $13. So having that sell side discipline can help sort of with the management of your portfolio, and then likewise on the buy side, starting to get some structure about picking up these early uptrends. To conclude, I was just going to go in here and click on the recent blog post. So this stores the last 7 days of stocks that have commented on the blog, and I'll just move through these fairly quickly as they're mostly stocks that we've covered, but let's just see if we can focus in on what the opportunities are in the market. Gold, we still like the longer term fundamentals, so if you're looking into maybe later this year or next year, maybe Newcrest can be a bit higher, but given it's rallied from 20 to 32, I don't think there's anything wrong with locking in profits on some of these gold trades. Rio, iron ore's pushed higher up to $93. There's supply concerns. Rio at around $95. I think that's an opportunity to take profit. InvoCare, kind of missed this one. We're looking for it to pull back to around that $10 level. It's pushed a little bit higher, but I'd certainly be keeping an eye on that. Northern Star, again, nothing wrong with taking some profit there. It's had a great rally. Orica found support at our level there at 15.50 roughly. Starting to move higher, stop losses below that. Computershare, not too much on the upside, but should be sort of safe and consolidate and move sideways, so add covered calls. Same with ResMed, bumping sideways, add covered calls. Caltex getting close to resistance for up around $26, and sort of really sort of fulfilled our price objective or targets there. Cochlear supported around 175, moving higher. Woolworths, value opportunity in the market, buying it here and selling covered calls. TPG and Telstra, interesting. So I think they should be fairly defensive. Sonic Healthcare, we like this, but again, getting pretty close to fulfilling our sort of profit target or price target there. Maybe a little bit more in a strong market up to maybe that $28 level, but I wouldn't think it does too much more than that. But next year you could see Sonic Healthcare trading back up to $30 to $32. Cleanaway, we like this. Buy on the dip, especially if you see it back at around 170. Coles, buy at the moment. Lendlease, a little bit riskier, but should start to recover into next year. James Hardie and Boral, short-term pressure on the share price, but after a consolidation, we maybe look for those businesses to move higher in the back half of this year. CBA, I think, just illustrates the downward pressure on the four majors at the moment, so we're waiting to see evidence that changes. Telstra, soft day today, so we may see a retest of $3, but should be good buying. NAB under resistance there at $17, moving lower. Macquarie, probably more consolidating at the moment, I think, Macquarie, but if we see that Nasdaq turn lower and the S&P 500 in the US roll over, we get a bit more cautious on it. Crown resistance at around $10. CIMIC supported about that $21, $21.50 level. Incitec there under resistance, moving lower, but we're keeping an eye on that for a value opportunity to emerge. And there we are, back to Newcrest. So thank you for listening in tonight, and I look forward to speaking again next week. And if you'd like to speak with me about either our broking account service or the software, please either email or give me a call in the office, 1300 614 002.